Hi. As of this recording, it's around Christmas time, and people are talking quite a bit about charitable giving. Americans are generous people, both with their time and their money. The government gives tax incentives to encourage you to gift charitably. And so, as an investor, you have a special way in which you can participate in charitable gifting to aid your community and help your neighbors. To qualify for a tax deduction, the charity needs to be a 501c3, a tax-exempt organization. This can be your church, your temple, your synagogue. It can be a food bank or a university. There are two ways in which you can reduce your taxes. For the first to apply, you need to be itemizing your deductions on your tax return. The standard deduction for single filers in 2023 is $13,850. And if you're married filing jointly, it's $27,700. To itemize your deductions need to be greater than that amount. There are three main sources of those deductions. The first is your state and local income tax. The second is your mortgage interest payments. And then lastly, your charitable gifts. If those combined together add up to more than the standard deduction, then your charitable gifts likely are reducing your taxes. Let's say, though, that you're a single filer and you have $12,000 in state income tax deductions and mortgage interest. Based on current law, the maximum you can deduct for state and local income tax is $10,000. So let's say you're a single filer and your combined state and local income tax plus mortgage interest payments add up to $12,000. You're still $1,850 short of the standard deduction. In this case, if you were to gift $5,000 to a charity, the first $1,850 would not reduce your tax burden. However, the next $3,150 would. That could save you hundreds of dollars in taxes. I suggest you pause the video here and look at these three different columns. In the left column, the charitable gift does not cause a deduction at all. In the second column, there's a partial deduction for the charitable gift. And in the third column, there's a full deduction for the charitable gift. The gift doesn't have to be just cash. It can be household items, furniture, clothing, or it can be an appreciated security from a taxable investment account. This can be a stock, a mutual fund, or an ETF. Let's look at these four different stocks in this hypothetical portfolio and see if we can determine which is the best one to give to a tax-exempt organization. Each is worth $5,000, but the one that was purchased for $1,000 and has $4,000 of growth is the best one to gift because the charitable organization can sell the stock and not pay any capital gains tax. Were you to sell the stock, you would pay capital gains tax on $4,000 of gains. This is the second way that you can reduce your taxes, but these two ways aren't mutually exclusive. So you can gift a stock, take a deduction for it, and at the same time avoid future capital gains taxes. There are limitations to the amount that you can deduct, but they're pretty high. I suggest you speak with a charity in advance and see if they can accept appreciated securities. Of course, don't assume that advice you're receiving from a friend on YouTube applies specifically to you. Check with your tax advisor. Lastly, money is a means, not an end. So I want to finish each video with a recommendation of a classical piece of music that can make your life a little bit richer in a different way. The theme in variations is a style in which a composer creates a melody and they repeat it in various different iterations. Variations on a theme by Haydn is a piece by Johannes Brahms. I think you'll find it lovely and it will make your life just a little bit better. Happy gifting!